Okay, welcome everyone. So this is CyberBulls episode 6. We are here because we all love to make money, right? And we need to know, did we make the right stock picks? So Xander here is our YOLO bull, as you all know. He loves to play the options market. He's all in on Tesla, but he bets on options. He wants to put more money in his pockets. Christian, when he looks at Tesla right now, he's saying buy, 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 but he's not afraid to say sell, sell, sell if the price goes too high. I'm Herbert. I get really excited when I find that company that's about to blow up. Right now, that is Tesla, and I have the patience waiting for it to show up. Awesome. Thank you, everybody. Main topic today is when do we think that Tesla's going to hit its all-time high again? The other topics we'll talk about, there is a monster Q3 estimates. Q3 is about to be reported in less than a month from now, October 2nd or 3rd, at least we'll get the print numbers. AI Day 2 is coming up on September 30th. Is there going to also be a Tesla bot demo? Is there going to be a dojo update? Are we going to now see a bump? Is that a catalyst or not a catalyst to the stock? We could talk about what is good debt and what is bad debt. And what's most important today, we'd love to get your questions and answers from the audience. So please start sending in those questions in the comments if you're here in the YouTube live. Wonderful. Thanks, everybody. This is a lot of fun. We've been doing this now for six times. And so far, we've just been continuing to grow. So hopefully this is something that will continue working well for us. So let's play a quick video. Nice. Okay. So today, one of the things we're going to do is we're going to do a lottery at the end of this, the end of the session. So we're going to this is only available for those watching live on YouTube. All you have to do is to enter and write a comment into write a comment. And every comment will be like a lottery ticket. In the end, we're going to do a selection. What we're going to give away is a PDF of all of my kind of greatest hits milestone lists. And the one I think most people would love to have is kind of like all the milestones that Tesla has ever done from its inception all the way to now. That's a really good list. So hopefully you guys will like that and just make as many comments as you can and we'll get this show going. So as we always do, let's start with the economy. So Christian, give us an update. What's going on? What's been happening?
So yeah, we've still been, in a holding pattern. Welcome everyone. Basically, we're still in a very macro headwind environment. We see Tesla in the last week or two starting to pull back. And even though it had a good day today, you see it outperformed. Just back a very high level, oil around 86. It's behaving itself nicely. Again, with Russia, and we hear about Europe, the possible catastrophe there. Nobody knows. It's hard to invest in this kind of environment, but we know that Tesla is, looking very attractive here. It's very cheap on a relative basis, even to the market. Historically, it's cheap, and I've been buying. So even with the macro headwinds, I think with the Q3 and Q4 that Tesla's going to put up, this is a great opportunity to get long. Real quick, the 10-year at 335, that's been moving up. So we could talk about this. Maybe Xander loves macro. To me, this is a little bit of a head scratcher, because if the market was looking for deflation and the market was expecting major catastrophe, you would think that 10-year would be being bought up and being pushed down. Well, it's rising, right? People are selling the 10-year bond, which is kind of a head scratcher if we're going into some economic catastrophe. So that's something to keep an eye on. There, again, macro, there's a million things at play. That's why it's so difficult, but that's a little bit of an opener.
What about you, Xander? How do you see the economy lately? What have you been playing?
Yeah, holding pattern's a great way to describe it. I like the outperformance of Tesla today compared to the NASDAQ, and I've just been straddling selling calls and puts whenever it's stable like this. There's a range that it likes to trade in, so I've just been every day picking up a couple of pennies in front of that steamroller, and excited that we're back to doing some trading. These 3-day weekends are no fun for me.
Okay, so you guys were saying that it's a holding pattern, but what I heard recently was that the QQQ is actually falling under again, and we're heading back into this kind of doldrums where things are looking bad, and then people are complaining, why has Tesla not rising? Why is it falling? And then this is a good comparison of a chart that Omar sent out today. That it's is this because of the Twitter overhang? Well, obviously, there's a lawsuit happening today, and it's still kind of beat right through it. But in general, how has Tesla been growing comparing to the market in general and other tech stocks in general?
So I'll just go real fast. So that just talks about outperformance today. I sent about 3 or 4 tweets, and they were all about the same tweets. I was talking about patience and investing and being patient, and anybody could go look at them. And basically, we are in this kind of a holding pattern. Macro has got the world and the markets in kind of freeze mode, right? They don't know to buy, sell. And what I'm saying is Tesla at these levels, knowing what we know is about to come, barring some crazy event, is a great deal. And these are the times that you have to buy, because when things are going good and the market starts to move, you don't want to start chasing it, because then your returns get annihilated. You have to buy when it feels uncomfortable. So as much as we are worried about the next thing to come, there's always a reason to panic. There's always a reason to worry. There's always a reason to not buy the stock. That's what I was tweeting. You got to be patient. You got to hold there, and you got to let the story play out. So that today was, again, who knows? We try to put it on, it's kind of what Gary Black says, Twitter overhang, no Twitter overhang, it's up, it's down. So it was up today. Why was it up? Maybe because it was down like 6 days in a row. And then some buyers came in, and some institution said, hey, I did some numbers last week on the 3-day weekend, and Tesla looks like it's a great deal. Let's go buy some. It could be that, so here you go.
Okay, well, you guys know that I've been like staying off trying not to think through, but I'm learning from you guys. I'm learning from both of you. And so this weekend, I sent a text to both of you, and I said, Xander, I am, pinch me, but I'm actually thinking about doing some sort of options play, because again, just a reminder to the audience, this is not investment advice. I am just sharing what I'm going through my head. It doesn't mean it's right. In fact, I highly recommend, please do not follow what I'm thinking. I am just making bets. And right now I kind of feel like I want to make a bet. So I sent a text to Xander, says, please help me. Because the reason I want to make the bet is that I do believe that Q3 and Q4 will be catalysts to the stock. The big question is, and I'm going to go through my milestone list that I shared with folks, but which of these milestones is actually a catalyst and which ones are not? And we've already been fooled, right? With the stock split. That was not a milestone. And I know you felt it was a catalyst and you thought it had something, but at the end of the day, it didn't really move us where we thought it would. And so, but we know that Q3 estimates, when we get there, that is going to be a catalyst. I believe so. So I'd like to play that. So I'm pitching myself and going, okay, do I do something right now? But I am afraid. I'm becoming very afraid right now, because I started to get spooked again, just literally the last 2 days with the economy talk. And I started getting a little concerned about that. So you guys just both said it's a holding pattern, but you're saying, right? Like, ignore that it's going to be okay? Or what are you saying?
Yeah, so like I did make a play about a week ago or so, and I think that position is down, I don't know, 20% or so. So it was closer to the 300 mark. So it's I think a November strike for, I don't remember exactly. I'd have to look, but it's a shorter term play. It's money I'm willing to lose. So that's the thing you want to consider, is if you're thinking that you want to buy a leap out to give yourself a safety net, I don't know, out to January after Q4 earnings come, I think that's being less greedy and a little smarter. So I did that as well. So I just put a little bit towards a Q3 place, but I went further than September. I wanted to give myself a little bit of room, and then the logic behind it was that I want to go about 45 days out from where I actually want the event to occur, because the theta decay, the time decay, the value of that contract starts going down very rapidly. So that was kind of my thinking. I don't know if what the
Yeah.
options experts would say, but that's how I do
Yeah.
it.
What I'm looking for is something. I don't want to do a month. I want to do January. So from now to January, I think that we'll move.
Yeah,
And so I'm willing to make a bet.
and consider when you look at the strike dates that you actually tie in the earnings report date. So you might want to go out to something like February, in case it's like in the 20s or something, and you don't
January
catch.
20th. Yeah.
Yeah, so somewhere around there. So you want to go out possibly
Gotcha.
to the next strike date.
Okay. Well, I'm seriously considering this, so I need you to talk to me some more. But maybe this week I might do something. I might not, guys. I'm not trying to. Please,
Yeah.
I may decide I'm not going to do anything because I'm a little scared of cat. First time I'm doing it. But who are we talking to, Christian? I don't recognize this guy with the Butterfinger yellow. Who is this guy?
You had a nice shave. I like it.
I went out to Austin this weekend, and with the wifey looking at some houses. So we actually saw a solar roof house. I saw a geothermal house over there in Whisper Valley. So we're kind of plotting the future, and so I couldn't look like a homeless person.
Yeah, you're ruining our story. You're ruining the story. We position you as the all-in YOLO bull, sold his 2 houses. Last week I make a joke that, are you still married? And now clearly wifey says, get me a house.
But I see, I need that solar roof, so I need that on my. I need a power wall, and I want to be close to Tesla. In case I want to go completely all in Tesla, work for them, and have a house that has it on the roof and on the walls. Come in, that's even more YOLO than you can bet.
And just to chime in, Herbert, on your earlier comment, you said you're nervous. I am the least nervous I've ever been.
Okay.
The leaps are bought in this. So I'm not trying to say I'm a magician here, but when the stock was in the 600s and the 700s, I was buying. So we're in the 800s. So I'm still up on those shares, and I'm not worried about it. Now, so that's a little bit of a different position. You're right. If you bought at much higher levels and it keeps coming down, and you were a little bit newer to the story, and you didn't quite pull the trigger at those lower levels, I saw value at those levels because I knew what was coming. But when the stock's crashing, it's hard to pull that trigger and go heavy in. So I was able to do that. So what I'm saying now is all that major buying is done. I'm still buying around the edges when it pulls in. But the reason I'm not nervous, and the reason I'm not nervous, it's down every day, is because I know what's coming. I know Q3 is a monster. I know Q4 is a monster. And I'll only caveat with one thing, and then I'll shut up. As long as the factories stay open, I'm fine. As long as they are making cars every day, without a scheduled break or whatever, I am 100% loaded to go.
All right. Well, my situation is I bought Tesla early, but I went and moved into all-in position, moved all of my Apple into Tesla. And I started buying at 600s. It was a year ago, July of last year. And then I moved a significant portion and switched it when it was $1,000, 900 something later. Everybody was going $1,000. There's no way. So now I did not buy at 650 like you told me to. I didn't have cash. I don't have cash. I need to move money around. So now I'm thinking, okay, it's at, what is it? I can't stop talking, pre-split numbers, right?
810 before the split, I think, something like that. Because
right now it's equivalent to 810
times
okay.
3. Yeah,
we're gonna have to switch 270 to 333.
825, 275 times 3, 200, 675. Yeah, 225. That's 825 there, buddy.
Yeah, whatever.
Okay.
Yeah, something like that.
What do you mean, whatever? Okay.
Well, 270 times 3 is 810.
We're talking about my finances, Christian. Please don't say whatever.
We're close. Where's the stock price close today? Does anyone know?
274 and change.
There you go. Okay.
Okay. All
Multiply by
right.
4.
Anyways, now, so I'm a different scenario than you, but I'm not going to buy more right now, but I want to play something, some sort of options thing, because I do
Leap.
believe, well, we talked about last time, is it considered a leap if it's
Yeah.
4 months from
You
now?
want to buy a
Are
leap.
September, October,
No,
November, December, January,
that's not
5 months.
that's not a leap. That's not even close to being considered a leap. That's just a call contract. What
Exactly.
what are you willing to lose the money, or are
Oh, wow.
you like what are you trying to do? That's the answer. That's the question you got to answer.
I am absolutely willing to lose the money. Like I think I mentioned to you guys before, I better not say things like this. Jesus.
You are starting to become a
'Cause you're
degenerate gambler.
yeah.
What are you talking about? I thought you were going to do a leap. You want to do a
It all
6-month
changed when I
call?
met you two. If I didn't meet you two, I'm
Herbert,
perfectly
you're
fine.
going off the rails. Look, I'm starting to learn from you. What I said when you said you're learning from us, I'm learning from you. I got my blinders on now, and I'm holding,
Yeah,
and I'm waiting for the story to play out. Now
I
you're
get
turning
that.
into like Xander or me, and I'm turning into you.
Yeah, but Q3, Q4 is coming. And I looked back at all the old milestones, and the ones where you see the stock rise, and not only rise, but consistently rise, is after earnings. Those are the ones that eventually move the stock. The rest, like I told you, Elon's tweets, a day or two. That's it. Then it just kind of nothing really. So, I don't know. This is maybe I'm.
You could do what you want, Herbert. I just got a quick little quote. I love quotes. The market could stay irrational longer than you could stay solvent. And I always remember that, meaning if you put a significant amount of money in on a bet, and the bet doesn't pay off in the next few months, would you rather have that money in long-term shares that will accumulate over 10 years? Or are you willing to put, a few, how many thousands are you willing to possibly lose that if your bet isn't right in the short term, you don't get the long-term potential of Tesla? That's the way you got to think about it.
Opportunity cost of the bet.
Yes.
Okay. Oh, damn it.
And you can also, just maybe buy another leap, right? Buy a 2-year out.
Yeah.
You don't have to be so aggressive that you're willing to lose however much you're willing to lose.
Beautiful.
Just go along with it, and then that's much easier thinking, much less volatility in the short term.
Okay, well,
and
let's talk.
Make some more money, right?
All right,
remember that 3-to-1 share hold. Like if you buy something, you for every dollar it'll go up like 3. If you want to be a little bit more out there, you can get times 4. So that's a lot of money. That outperforms everything.
All right, let's do that. Let's do some calculations next week. But basically, if I still look at the long-term leaps, like June of 2024, I feel comfortable, less risk. And yet you're saying that I can still sell the option in January, February if it goes up, and I'll still make money out of this.
Yeah.
And I just need to figure out how much do I want to make. It sounds like this is such a easy thing, but okay. All right. Well, Xander, you're scared.
Exactly. Let's cover that real quick. It sounds terrific. And it's so easy. You're going to make 3 to 4 times for every dollar that Tesla moves up. But obviously, if nothing happens, then the value of that contract starts to drop. The good thing about these long-term contracts is that you don't lose all of it. You can get out if something is going against you, or the market is going against you, and then you also have time for it to recover. And that's the big difference with these longer term contracts versus trying to you're essentially trying to time the market and make an earnings play. You could be correct, but I always start with being willing to lose all of it, and then if you still feel strongly about it, that what the market is going to value Tesla's earnings reports, then you can make the bet, right? But
okay, well,
it is a short-term bet.
Let me just explain to me a little bit of how I could lose all of it. Now, if I say June 2024, then I won't lose all of it until when? June 2024? Or is it a year before?
Yeah, Sandra will speak to it. So the June 2024, you're giving yourself more time. So if Tesla stock, say you buy it and Tesla stock goes down, the contract won't go down as rapidly because you have all that time. If you do like a 3-month or a 6-month trying to do an earnings call and the stock goes against you, that is going to deflate so fast. You can lose 80% of your money in like a week. So it's very risky. Yes. Where the leap, a lot of the value's in its time. So even if it goes against you initially and you hold it, you have that 2 years, close to 2 years play where it can recover. And if it does drop in the interim when you first buy it, it's not going to go down as much. So if Tesla goes down 10%, you might only be down 20%. So it's not disaster. Yeah, you're better at this.
All right. Well, here's why I'm thinking. And again, I'm just sharing my thinking. I'm probably so stupid and don't know what the hell I'm talking about. Stock is flat. It's gone down, right? And we are now September 6th. So this quarter ends in I can't even calculate, but 24 days, right? Like 3 weeks from now, this quarter is going to end. And so far, what we're seeing is everything's going gangbusters in Tesla, volume production of cars. So this is Troy Tesla's tweet, and he said that the delivery estimates for Q3 2022. He did this as of August 24th. So 4 days ago, he said it's still the same, but it's basically his estimate is 368,000 cars. Whereas the analyst consensus is 357. And then he also kind of said that the Tesla China team is expected to deliver more than 100,000 cars this month in September. And this is going to be a new record. So the highest month last year was 71,000 in December. And the highest month so far this year is 78,000 in June. But we're expecting this September is going to be 100,000 cars. So it's looking good, right? It's looking good that Q3 is going to come out unscathed. We have 3 weeks still. We don't know. But if Q3 comes out, it seems to me like it's not yet baked into the pricing. What's your thinking about the Q3 estimates?
So you're right. It's going to be a monster, and Q4 is going to be a monster. And as long as the factories stay open and there's no shutdown, because in China, some type of COVID, there was a few cities that were having something, but Shanghai looks like it's good. That is the key. You have to stay open. Any type of flinch in that area throws the market. Even if they have a Q3, it's not going to be a monster because now we're going to lose deliveries. That's not my base play. I think we're going to be okay, but that's the key to that whole story. Right? We still have 3 weeks to go to the end of the quarter. Same thing with Q4. We got to stay open and we got to keep producing, and there can't be delays. And that's how you get a monster stock move, because if you do and you have severe output problems, then you've got a stock problem. But I agree with you. I think that chart's a great chart.
In my opinion, I think that Q3 is going to be very, very healthy. And Wall Street's and the narrative is going to start changing. But it's going to be that Q4 number and possibly maybe a credit upgrade by that point that's going to compound the whole thing. And so I think in January is where, skipping ahead to your question, I think January is when we see that 420 number.
I think people are looking at 4. I think Q3 is the key, because Wall Street, they're pretty dumb, but Q3, if they can do 380,000, say, whatever, and they put up the margins and they got the EPS that you'll see on those kind of cars, it doesn't take a genius to know if Q4 is usually always going to be significantly outdoing Q3. So all you need to know is they're going to do a lot more, and the margins are going to be better over more cars, and you're going to have more profits. So Q3 is going to be the wake-up call. Now, they might say, well, we want to see Q4 again. I don't see why, because it's going to be obvious, because now everything is happening. All the factories are moving. Q3 is the harbinger for Q4. And you got to be dumb as a rock to not know what comes for Q4 after you see the Q3 print. You got to be able to.
Explain that a little further. I mean, if Q3 estimates come out and they beat the analyst expectations, which we think will do, what's going to happen? Why is the world going to shake? What's the thing that people are going to go, oh my God, what's going to happen?
Because Shanghai is going to be a record, and that's the profit center, and they were open all Q3 and they're killing it. Like you just had the chart, the amount of units. We got Fremont killing it. We got more SNX. We had backlog from Q2 that's coming through. We got all the price increases that are finally working their way through. We got the gigapresses, which is helping with efficiency on the cost of goods sold end. So that drives the margins. And then everything just drops to the bottom line, right? That's not even including all the FSD, all that stuff. So what I'm saying is once Q3 hits, everyone knows Q4 is going to be bigger, barring that the factories stay open. So what I'm saying is you don't need to be a genius what's coming for Q4 once you see Q3. So it's simple.
But in that logic, though, why can't I say to you, well, it's clear what's going to happen in Q3 now? You know, like you're saying, Q4 is going to be better than Q3. Why can't they start saying Q3 is already going to be good?
Two reasons, I think. I think Wall Street plays games, and we're in a tough macro. And there's a lot of retail investors that are still scared out of their minds and listen to the media, and this is going wrong and that's going wrong in Europe, and Europe has no energy and it's the end of the world. And people are still selling because the media is scaring everyone to death. All right, I'm just be plain honest. And people go hit the sell button because they don't know what they're doing. And then you have savvy investors that are staying with the story, and they know as long as these factories stay open, Tesla is going to deliver, and I want to own the stock at these levels in anticipation of the 3 print, because it's going to be a big one, in anticipation of a 4 print, because it's going to be a big one, and in anticipation of another 50% the next year. So that's just the way I look at it. I keep it very simple. I'm not a super analyst. I just use my logic and my brain, and I look at the macro and I make a decision. And that's my decision.
Okay. How about you? How about you, Sandra?
Yeah. I forgot what the original question was, but
does Christian have brains and does?
Oh yeah, no. I think Q4. You know, I think you interjected and said that the Q3 is the key, and Q4 is you know, obvious, but I don't think Wall Street quite gets it, right? And the media is portraying that you know, after Q2 that there was cars that, you know, that they dropped their production. I think that the key really is going to be cash, and how much cash they're pulling down with these factories that are ramping, and are they able to you know, grow their profitability, right? Their profit margin is that increasing while ramping these factories, and it's going to come down to that. If they are, if they're able to generate a lot of cash and pull that stuff down with no debt, and that earnings story is just, it's so compelling. So even if macro is kind of still iffy with energy and that stuff, going long, if Tesla is able to navigate this stuff despite these challenges, and produce these high EPS numbers, or higher EPS numbers than Wall Street's predicting, then I think, you know, at some point you have to stop listening to bears and realize that going the distance with Tesla for me is you know, that's the easy pick. So
yeah, I don't know if you look, you had an analyst come out today, one of the top auto analysts, Gary Black mentioned it, overweight or something like that, and had a price target of what? Did you see it, Herbert?
Yeah, I did.
And and so I think, Xander, as much as we're reticent, I know you're a huge bull, but what I'm saying is, if the Q3 is what we think it is, and every other company in the world, Apple, Google, all these mega caps are flatlined or down on estimates and what they're reporting, and Tesla comes out with a blowout, right? I don't know how you could not, that stock doesn't go higher. It just, you know, again, anything could happen, and I'll just hold the shares and wait. But what I'm saying is, the significance of it is so great that Wall Street is already waking up to it. And what I'm saying is, it'll happen quick. You're going to have drip, 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 and one day you're going to be up 7%, right? And you want to own it before it's up 7%. You don't want to chase it. So that's why I'm saying you want to be in it before it moves. Yeah.
Okay. Here's my thinking. My thinking is that so you're saying Q3 is going to be a big monster quarter. It's going to make the stock move up. I would not be willing to make that bet, but I'm willing to make the bet of the Q4, as we've all talked about. So the February kind of leap makes sense to me. However, I think Q3 can be a huge catalyst, but there has to be some very important things that they need to surprise on the upside. And what that is, I think, is the Giga Texas and Giga Berlin productions. If they can show that those two factories are producing more than they expected, then that shows that this is ramping. This is now about to ramp, and they need to surprise on that end. Specifically.
Yeah, but
Texas.
The thing is, Herbert, they don't break it out. They're not going to break out Texas, and they're not going to break out Berlin. So to me, also another catalyst, call me crazy, is deliveries. If they come out with a delivery, say at the end of the quarter, what's a couple days they report, if they come up with a number that Wall Street, I think they're down like really, what are they at? Like, I don't know. I think they're at like 360, 350. I don't know where they're at. But if they come in 380, 390, close to 400, like some bulls are thinking, because Shanghai is killing it, and we are seeing some production out of Berlin and Texas, that could also be a catalyst, because every other car company is contracting, right? Like double digits. And you have Tesla here growing like a monster. So, it doesn't take a genius again to know if the volume is there and the units are there, you could do a simple napkin math and get the earnings per share pretty easily. So I think that could also be a catalyst. Just my opinion.
Yeah, but won't Wall Street just wait until they say, oh, well, they're not going to do 1.5 million for the year? That would be so difficult. They're going to find something.
I don't think they'll wait this time. I think Tesla's under-owned. I think a lot of institutions don't own any of it, or own very little of it. I think retail's been giving their shares scared to death. And when that stock moves, retail is going to jump back on it because they're going to be scared they're going to miss it. And so, no, I'm actually quite bullish. I've been bullish. I've been buying in here. I'm waiting. I'm being patient. I know everybody wants it to double tomorrow or triple whenever.
Yes.
I'm not playing that game. Buy the shares, accumulate them now. The numbers will come through. The earnings will come through, just like I predicted. All those catalysts, Herbert, we talked about before. I said, no, you're in a macro, tripled, 3 for 1, this, that. None of it's going to matter. Production, deliveries, earnings will drive this stock price, and I'm going to stick with it.
I agree with you. So I'm going to go through some lists of catalysts and milestones that Gary Black does, and then what I do. And I think the question for all of us is try to figure out which of these are actual catalysts and which ones are not. Right? So here's a list that Gary Black sends out every week. And he says that the Twitter overhang will lift in September. He's been very vocal that he thinks that is something that's holding Tesla stock down. Specifically because he thinks that if Elon's forced to buy Twitter, he's going to need to sell more Tesla stock. There's just confusion. There's just always taking over the conversation in the market. AI Day 2 run-up in September, he thinks is a catalyst. I actually don't think so. I think we talked about this, right? Now, I want to go through this. I want to ask you guys. I'm going to just quickly share my quick opinion, then let's go through each one. AI Day 2 is a recruitment event, and I don't believe that is in any way typically going to be a stock catalyst. Even if they do an incredible demo of a product, usually after a product demo, Twitter community, Tesla folks, we get all excited, but doesn't mean that it translates to more people investing in a company. They usually want to wait until it becomes a product that's being sold. He, of course, talks about the third quarter volume and earnings per share. The S&P credit upgrade, he's pushed it now to October. He thinks that there's going to be a buyback, $10 billion buyback by December, and then he moves on to next year and the FSD beta release. So for me, let me see my table. So this is my table that I've been doing since the beginning of the year. This is a list of catalysts, or I call it, it's actually my milestone table. And then, so again, which of these are actually, it's more milestones than it's catalysts, right? So what I've got here is that on September 30th, we're going to have AI Day 2. Then there's going to be a Tesla bot demo. There's going to be a Dojo launch. Again, I don't think these are catalysts. You guys can tell me what you think. Q3 earnings is going to be a massive catalyst. I expect not only blowout volume and production, but I'm going to see, which we will see on October 2nd or 3rd, but the actual earnings report October 20th, we should see record revenue, record gross margins, record earnings. That's what I'm expecting. Do I think that Twitter overlang lifts? I put it in October. I think that's a milestone. I'm not a big believer that that is a catalyst. Master Plan Part 3, he's hinting that it's going to come out within a month or two. He just said that last week. So it's going to, I think it might come out. And by the way, these master plans, they come out as blog posts. So they're not necessarily in a Master 1 and 2. He did not do any presentation and did not have it in a demo or anything like that. It's just a blog post written. So I don't think, again, that typically is not a catalyst. That is typically just a milestone that occurs, gets us all excited.
Let me jump in, Herbert.
Yeah, go ahead.
Okay.
Yep.
So I agree. The EV credit's that's a long term. I know analysts have been talking about it, and that's important, but that's a long term. The AI Day 2, we disagree on this. I think if they can show something that could excite some people, and I think that could bring some money in. If they could show something, I think it's more than recruitment. The first one was recruitment. Elon said this one, he's going to show something. So it could be recruitment / we got something to show you, because he's kind of talked about that. I know Elon can hype it up sometimes, but I would be surprised with that. I would not sleep on that. But of course, the earnings is going to be the main driver. I do believe investment grade could, and Alexandra has done a great job with that, showing the implications of that, and shout out to her. She's done amazing work on that, and I've read everything she's done on that. So that's great. I think that could be impactful to me. Seeing semis out there could be impactful. So these things I think can move, but I think in this macro it comes down to earnings. If earnings, hold your hat on
Yes.
that. All this other stuff is fun, but it's not going to move stock prices. Institutions want to see the bottom line, and if Tesla could deliver the bottom line, the stock price, I believe, will be reflected.
Xander, what's your opinion on each of these upcoming milestones? Are they milestones or catalysts? Which ones are going to be catalysts?
I'd need notes and glasses to see it on the screen.
So let's start with AI Day 2, Tesla bot demo, Dojo launch. Start with that.
Yeah, I think AI Day is going to be great for nerds. Only if they surprise with something material. I think Wall Street loves numbers and math and projections, even though they want to ignore the ones that Tesla guides for. But I think it'll just be a fun event and a recruitment event. So I think a lot of these things are interesting to see what's coming, but to me, it's like the whole catalyst thing. It's changed. As you saw, you thought that a stock split would make some kind of short-term buying, but for some reason, Wall Street isn't. We haven't switched to. And apparently, I was wrong when I said that we've gone over 50% in a previous show. So, in terms of institutional investors in Tesla, so. Until we see that, right? I think you've seen some other tweets regarding, institutions holding, whether it be Microsoft or Google. So I don't know if catalysts are viewed the same by Wall Street anymore. I really think it's just where's the unit level economics of it, and so now I just play with some of these shorter term contracts, betting that they're going to be a catalyst. But so far, I've been wrong more than I've been right. So majority of it is I just hold the leaps.
And guys, think about it real fast, Herbert, and then I'll let you go.
Yeah,
we are in a bear market. Stock splits and all this stuff in bear markets don't work. They work in everyone's having a party and we're going to the moon every day. Look at Google 20 for 1, nothing much. Now their fundamentals are worse than Tesla's. Amazon 20 for 1, it was a nothing burger. That's why I'm saying in a bear market, I think the only thing where Tesla could break out of the macro, and I think they could rise in a tough macro while other companies going down, you saw it today, is the earnings power. That is what will get us out of a bad macro, even if we're in a bad macro. That's what I believe. Again, I may be wrong, but I believe that if the earnings and the margins come through like nobody else, and their earnings estimates keep going up, and Wall Street has to keep playing catch up, we could be in a bad macro, and the stock could perform even if the S&P is down. That is my belief. That is my thesis. That is what I've been saying week after week after week.
Even if the S&P is down. Okay.
Yes,
Well, we got you on
even if
record.
the S&P is down, I believe
All right.
Tesla can go up if the earnings is blowout.
And what's a blowout? What's the definition of a blowout earnings?
They beat out earnings. I don't know. Whatever the
Against
expectations are, they come in 30% higher, 40% higher, 50% higher.
Whoa.
Yeah.
Okay.
They've done that before. They could do that. If Wall Street has the units off, if the Wall Street has the units off by 30,000, you do 30,000 times 50,000 a car. I'm just making, it's probably a little more, and then put a gross margin on that or an operating margin. You could do a simple napkin math. You have billions and billions of dollars that Wall Street doesn't think Tesla's going to earn. Put a multiple on that, and you get a higher stock price. This is not rocket science. We're making it too complicated.
Okay. No, I put up that Troy Tesla delivery estimates in Q3, and his estimate is only 11,000 cars more than the analyst consensus.
That will go up. He always drags his feet, and by the end of the quarter, he's always significantly higher. Again, I'll repeat. I know I'm repeating myself, but I think it's important. If the factories stay open, they will deliver more than 370,000 cars.
All right. A quick pause here. We're going to go through the list, or the big question of the day is, when do we think Tesla is going to hit its all-time high again? I want to hear some very good explanations, not just a number for some reason. Okay. In the meantime, if you're watching this on YouTube, please write comments, and we're going to do a lottery at the end, and we'll just pick one of the comments. We'll win kind of a PDF of all my best lists emailed to you.
I remember, Herbert, you said you were going to get to some questions. Well, you got to, if you want to get to some questions,
Yeah. So we need the audience here to write in questions you want the team here, the Bulls, to answer. And just please write the word question or Q right in front of it, so it's easier for us to spot it as we go through the list. All right, big topic of the day. When do you think that Tesla is going to hit back to all-time high? I put in cheekily 420.69, but the all-time high was 1,234, if I was correct. Yeah, something like that, right? Or 1,243, I'm sorry.
Yeah.
So whatever that is. But that's fine. 407, I think, something like that. Anyways, are we going to get there?
You want to go, Xander?
Go, Xander.
Well, I kind of already covered that. I think that it'll be after Q4, even though I'd want it to be after Q3. I think it's going to take, I would guess, like January 4th. It'll take one day to once they announce the cars, deliveries, production numbers. I think that day it's going to go kind of crazy, and then the following day that's going to be my guess. So not just a.
Sorry, what day exactly? What day specifically?
January 4th.
January 4th. That was my answer 4 months ago, by the way. I think you might have listened to my Twitter space, but you're stealing it. Okay.
Sure. There you go.
So you know me, I've been consistent with this. I didn't think it was going to be a rocket ship. I said we would bounce after Q2, and we have bounced off the 620 lows. I thought they would hold. And now I'm talking about grinding into the end, the Q3, Q4. I believe, we're going to get to around 1,000. It could be more if it's a really blowout. That would translate to 333. So I'm looking at all-time records, probably sometime in Q1, but probably later in Q1 after that earnings print has hit, which would be in the middle of, so maybe late January, early February area. That's where I'm
usually around January 25th, 21st, right. 25th, something around that.
Right. So I'm February then. Sometime in February, I think, if everything marches along, then we can make highs. Yeah.
Okay. So that was my answer too. I think it's going to be after the Q4 earnings report, which will happen in the third week of January. But what I think we haven't answered is, how do we get there, right? If the stock in December is still at the middling 200s, how do we get to 420? It's not, if we are there, then below a Q4, it's not gonna. Is it gonna jump from 250 to 420?
Well, we're not at 250. No. We're at 270. 5. Here's okay. The thing, though, Herbert. Yeah. So again, this is all speculation. We're having fun here, but here's the way I think about it. Right now, we're in a bear market. It doesn't mean 6 months from now we're going to be in a bear market. So by the time Q4 rolls around and we see the January print, we might be coming out of a bear market. Maybe inflation has rolled over for a few months and the market's feeling better. So, which I think will happen. I think the macro is getting better, not worse.
Pause.
Yeah.
You said earlier, and I have it recorded, you said that it doesn't matter what the macro is, that Tesla's Q3, Q4 numbers is going to override the macro. Did I not break a pause and did I not record it?
No, I'm being completely consistent. When I'm saying the stock could go higher, you're talking about all-time highs. So the stock can move higher and not hit an all-time high. What I'm saying, you asked two different questions. I think we could power up into the 320, 330 just on earnings and a bad macro. What I'm saying is if you want to get into the fours and you want to hit all-time highs, inflation rolling over with the earnings will get you to the all-time highs. So am I clear?
Yeah, that's better. Okay, I'll let you off the hook again. Tried to get you again, but I missed again.
So do we agree that it's going to happen before the earnings report comes out in January?
No, you missed it. Both Xander and I, both Christian and I said that it's going to be after. So January 20, something like that. It's not going to be after the print. Is that what you're saying? It's got to be not just... Unless see, the thing is, the problem is that analysts don't have calculators and they don't seem to be able to do addition and math, because if they did, they can certainly just take the print of the production and or delivery numbers and then just quickly kind of figure out what the earnings is, but they will not. The big thing is the miss in the gross margins. They always underestimate with the gross margin, with therefore cash earnings.
That's why I say Q3 is going to give them the revised math where they can do a better job of doing some calculations, hopefully. But either way, that's why I like the idea that if you're going to play earnings, play the earnings, not the delivery, not the delivery numbers.
Yeah, exactly. Playing earnings, not the delivery numbers. But I guess what I would...
I would buy shares and hold. You don't have to make this complicated. Buy shares, Herbert, like you like. Well, why do you want to gamble on a short-term call? I understand it, but
no, I don't.
That's so unlike you.
No, you're right.
Yeah.
I don't want to gamble on a short-term call. I believe that, like I told you, 3 years from now, I'll open my eyes and I'm doing very, very well. Yeah. But then when an opportunity comes, like right now, you're the one that's telling me, right? It's like, it feels like an opportunity where Q3, Q4 numbers are going. We look like things are heading in the right direction. The analysts have still, the numbers have still not risen, the stock price to where it should be, as far as I'm concerned. So it feels to me that it's going to make a move. So if I think that it's going to make a move because Q3, Q4 numbers, we're not just talking about these other milestone things that are happening. We are truly expecting the volume numbers to come in. Would I just leave that on the table? And that's why it's my greed, man. I guess it's greed, right. But I got to
we're speculating. Yeah, we're speculating. We're speculating, but we might be wrong, Herbert. So what I'm saying is we're still in a bear market. My opinion is what I'm stating. I could be wrong. So when you're making a bet like that, you're gambling, you're not investing. So why don't you just take the money, you're going to make your call and buy shares?
Good question. When is it a gamble? When is it investing? Okay, so if when Xander makes option trades within days or weeks, Xander, I consider that gambling. Maybe a little bit informed gambling, maybe a little bit of information on your side. Maybe enough, but not. I still think it's gambling. You don't know. Is it 3 months? Is that investing?
No.
Is it 6 months? Is it a year? No. What is investing, gambling versus investing?
So I'll go real quick and then Xander could comment. He could defend himself. When you buy a short-term call, a 1 month, 3 month, that is gambling. Investing is buying shares of a company and you plan to hold those shares over multiple years. That is the classic definition.
Multiple years.
Yeah.
That's investing. A financial advisor speaking here.
Now,
financial advisor.
If you want to play a short-term call, I've done that before, but don't confuse that with investing. That is a gamble. You're doing a short-term bet and you're trying to play an earnings report. The market, it could be a great earnings report and Russia decided that no more gas to you, and your great earnings report is going to go right fizzle down You know what I mean? Because we're in it. So what I'm saying is that is a gamble. So I'm obvious there. And Xander sells calls and puts. Go ahead, Xander. Tell him why that's less of a gamble. You're playing the casino. Yeah.
That is correct. So most of the stuff like that you would say, Herbert, is a gamble. What I'm saying is that like when a Tesla has a 5% down day or a 4% down day, I'm buying a leap. Why? Because that to me is a safe thing that if I'm wrong, I can go long with it. But then if we have a couple of days of recovery and then I make 10% on that money, I pull that back out. So yeah, I just made a trade in a couple of days because I'm not
See.
comfortable or confident that Tesla is going to continue to rise. So there's a portion of my portfolio that's flexible and dynamic, and at one point it was tied up and I didn't do anything with it, and now I've kind of started moving stuff in and out. Why? Because I want to make sure that I have access to this money in case I do need a down payment or life events happen or whatever it is. But the calls and puts that Christian just mentioned, so I'll tell you, in the morning, I didn't make a trade. I was sleepy. I kind of went back to sleep after I woke up at 6:30 this morning. I'm on Pacific, but at the end of the day, my wife was coming home, and we had that big push back up to the high of day. So right at the high of day, I sold some calls, my entire portfolio worth of calls, and within by the end of the day, I closed those out. So within 40 minutes, I pocketed some change. The crazy part is it's more money than people make in working all day, and I did that with some sort of confidence. I also sold a put as well, and I ended up not closing that one because for some reason, I just think we're going to have a decent up week. I could be wrong, but it's so safe. Well, it feels safe to me. In that by the end of the week, I don't think we're going to drop below 250. So
That's a gamble.
yeah, in your mind, but it's not a gamble because I have the money to buy the stock at which is $25,000 worth of a stock. So my bet is that it doesn't go
Okay,
down.
understood. So the only loss, it's not like you're going to lose in your call, so you're not going to lose money. You're going to have to be forced to buy the stock, which you would want to have done anyways. I think we lost his audio. Okay, we can't hear you now, Xander. I want to hear from you, Christian, then, when you said that he's playing the casino, not the gambler. Can you explain if that's a true thing or if that's just okay,
No,
explain that why. Why is
thing.
that?
It's a true
why
thing.
Is that?
Now,
explain
this is going to be I'm going to try to do this quick, you got to listen. Now, the audience you might not understand it, Herbert, but the audience
I will not understand it.
So
no, please dumb it down for me. Okay,
yeah,
go
so
ahead.
when you have 100 shares of Tesla, you need at least 100. You could sell one call. When you sell the call, you sell it at a higher strike price, meaning you get money for selling the call, that you're willing to relinquish your shares for Tesla at a higher price for money. So money gets already into your account.
Yeah.
And if the share price rises, it's a conservative play. If the share price rises through your strike price, you have to give your shares. For an example, if you're at 300, I'm just making this up, 300, and you sell a strike out for 350, and the stock goes to 380, you got to sell your shares for 350. So you still collected premium. You still made the 50 from the 300 to the 350. You just missed out on the 350 to 380.
Yeah.
So it's a conservative play. And then when you sell a put, you're basically saying, well, I want to go lower. Stock's at 300. I'll buy it at 250. And if it gets down to 240, you still have to buy it at 250. But in exchange for that, you're also getting premium. And if that happens, then you must buy the shares for 250, even though it's at 240. I try to make it simple.
Okay. Well, I think we lost Xander, so he needs to come
we
back
gotta
on
have a
both.
day of this where we gotta go into it very basic, and yeah, it's kind of hard when I'm just kind of riffing it like this.
Yeah. No, we're gonna have to do calls and options and puts. Slowly
it's not
learning.
Hard. Yeah, it's not hard. You just need the basics.
We make it sound like it's so safe, and you're not gambling. You're the casino.
Covered calls are safe. No, because you don't understand them. You're thinking I'm buying a short. They are risky. When you buy a call like a week out or a month out, that is a risky gamble where you're going to lose all your money. That's stupid. A covered call is a very calculated risk. It's essentially saying I'm willing to sell my shares at a higher price than they are now, and in the meantime, I also make money off of it. That is not a risk. The only risk is you won't make as much money if the stock goes through the roof. You're
Okay,
still going to
so
make money.
a covered call and then a put. A put is when you don't have to do anything, but if it falls, you have to sell it at the you have to buy it
at
at
the
the lower
share
price. So as long as you have as long as you have cash on hand, if
Right.
that forces you, then
and
you're
you
not.
want to own the stock long term,
Yeah.
you're getting it in at much lower than what it is now. So again,
But
it's
if
a
you-
bit of a safe. Yeah.
If you don't have cash on hand and you're making, then you're really betting. And then if it
Well,
falls, now you're
then I
forced to
wouldn't
pull
do it.
cash.
You need the
Now you're going to
cash.
be,
The
you're
brokerage,
going
a
to
lot
have
of the
to.
brokerages, they use it as collateral. You have to have the cash sitting in there,
Okay.
or they won't let you sell the put.
Okay, awesome.
Anyway, you
Well,
can pepper me. I don't know where Xander's at, but if you want to keep going, you can hit me.
yeah. Well, we can get started with some questions, I think. Okay, let's get going with this one. Will the 4680 battery hit? Will the 4680 battery hit the scale Tesla needs for 2023 volume growth, or will they be cell starved?
That's a great question. That is the question. So I think it's been mitigated to somewhat this year because they got the 2170s. That's what the little bit of delay, and we see techs are starting to ramp now. But 4680, they did make deals, I believe. And Herbert, you could chime in. You're maybe more of a battery expert than me. To have other people make 4680s, and we know CATL, Panasonic, they're all making, because they know Tesla needs every battery, and they're going to be a great customer because they could use batteries for the next 20, 30 years. So everybody wants to get Tesla's batteries. So could it be a problem? Yes, I would love to get your opinion. I guess scaling would be harder if they can't get this off the ground. What do you think, Herbert?
Yeah, so I think 4680 is required for the Semi and for the Cybertruck. It would be great. It was part of the Model S, the Model 3 and the Model Y. But it's not necessary. I think they're going to still sell in record numbers for 2023 if they say that Model 3, Model Y is still the 2170s. So, but then the key thing is people are expecting Cybertruck and Semi to be selling in scale. Or, when I peppered James Stevenson on the numbers and he showed me the volume production for 2023, part of my video was I was like crying that I thought that the Semi and Cybertruck numbers were way too small. Now, comparatively to Model Y, that's why it looks such a small sliver, but really it's going to take them time to scale anyways. So personally, I'm not thinking, just me, I'm dumb. I don't know anything about batteries. I know nothing. I've got lots of friends here. I wish that we had Jeffrey Lutz back up here and others who are, experts. Kristen, Ash, these girls, they are really good at batteries. So
don't forget the limiting factor.
Well, of course,
Yeah.
But I know nothing, but I'm saying that my expectation is that it's required for the Semi and Cybertruck. And personally, from what I've been hearing, I actually don't. When I interpret what we've all heard in the last several months, I actually don't think that they are. It's slower than they wanted. The scale's not there, but I feel like it's like there's no red flags showing to me that it's not going to come in scale. I think it's slow growth, but then they feel confident that it's going to. They actually made the comment that the last quarterly earnings where they decided to pare down the complexity of the 4680 so that they can produce more. So I think once they've pared it down and not promised all the features in all the world what's going to be able to do, it's now designed to be something that they feel confident they can scale that and then add in the extra beautiful, wonderful features later.
I think essentially they'll get there, and 2170 will be fine, and they'll have enough of those for Model Y. Again, that's the cash cow. All these other things are little cherries. Go ahead.
All right. What type of Roth
question.
is Christian in that allows him to trade without tax implications? I don't know
Beautiful
what he means by what type of Roth. There's a Roth.
There are types of Roth. So you have a 401k Roth that is from your employer, and some employers allow you to have a brokerage window. Not all, most don't. And then you could set up your own Roth IRA. Here's the difference. When you set up your individual self-directed IRA, that I believe is capped out right now at 6,000. They usually move up. It used to be 5,500, 5,000. Now it's 6,000. That's the most you could put in every year, and you have to have income of that amount to put it in. But that maxes out, and you could do your spouse. With the 401k Roth, you have higher limits, right? That goes up every year. It used to be 17, 18, 19, 20,000. I don't have the numbers right in my head, but you can put a lot more in. If you have that brokerage window, the Roth IRA is great. And if you want to own Tesla stock and they give you that opportunity, you could put more money in than just say 6,000 every year. So there are two types of Roth, but essentially is the Roth IRA is money, it's after tax money. So it goes in, it's already taxed. And once it's in there, it could go and balloon to, you could put 100, over time, you could have $100,000 in there. And if your investments over 20, 30 years turn into 5 million and you're over 59 and a half when you start pulling it, you pay no tax on it. It's all gravy. So you don't have to give one dime to the IRS. And the other beauty is there's no minimum required distribution like a regular IRA. It used to be 70 and a half. Now I think it's like 72. They changed it. There's no limit, meaning you could have that thing in there for 80 till 85 and you don't have to pull. So a Roth IRA, everyone out there, if you have a kid that's 18, 19, 20, get them to open up a Roth IRA. It is the greatest investment vehicle ever.
I just did it for my 20-year-old and my 18-year-old. It's a sore spot for me. I feel so stupid, but I'm Canadian. So half my life I spent in Canada, and I was investing in the IRA equivalent called RRSPs. So that's where a lot of my money is stuck there. When I came here, I knew all about IRA. So always converted all my 401ks when I worked for a corporation, moved it always to my own IRA. And I was invested in that. I didn't really know anything about Roth IRAs. I'm kicking myself today, of course. Like, it took me a long time because, when you do an IRA and each tax year, you're a corporate executive, you're making salary. Now you're trying to reduce your tax implications for the year. Yeah. So yes, sure, I'm going to put in $6,000, $7,000 per person per year, spouse and you, into a IRA. So you save on the tax that year.
Right.
We all do that. Great. Right. What we should be doing, and I should have known this earlier, was opened up a Roth IRA and put in.
You could do that too. Yeah.
Pre-tax dollars and just move it there. So post-tax. I pay tax on the money, but I put in extra cash into a Roth. Now, if you did that early, then each year you can have, is it 7,000? Whatever, depending on.
I think it was 6, yeah. But there's one caveat. Yeah, there's one caveat.
6,000 every year. Mm-hmm. Then now you got 6,000. Now you have 12. Now you have 18. Now you have 24,000 in that Roth. And then you can invest that in stock, and any gain, you're not taxed on it anymore.
Right.
So this is the beauty of a Roth IRA. And I'm like, damn it.
So the beauty is that, so if you have money, though, here's a little caveat. This might be a little in the weeds, but it's important. If you want to contribute to a regular, this is not a 401k. So this is just you opening up an IRA for the tax deduction. You could do that, but you can't. There's a limit of the 6,000 limit or 7,000. So you could do one or the other. So what I like to do, the Roth IRA for 401ks is relatively new over the last 2 years. So it used to be the regular 401k, they wouldn't tax you. You wouldn't pay taxes on your income. And the theory is I'm going to pile it up in my 401k, never to be taxed. And then I would pay the tax later when I'm older and I'm retired in my 60s. So if you did that, then you could also open up the Roth IRA and be putting in the 5,000-6,000 a year every year while you were doing the old 401k. So it was a mixture of both. And that's kind of what I did. So, but now you can do a Roth 401k. So there's a lot of ways to do it. But the main thing for the audience is learn about this stuff. Learn about the vehicles, because investing is one thing. But what's your investment in? Is it in a Roth 401k? Is it in a regular 401k? A Roth IRA? A traditional IRA? These things are important because they will have tax implications for you and they will have minimum required distributions for you. Yeah. So this is important to understand.
But regardless, if it's a Roth IRA or just a traditional IRA, if you've got money in there, you can trade it. You can buy and sell stock,
and you don't have to
pay
tax
implications
until you pull the money out. Right, correct.
Yeah. So that's the beauty. That's why instead of, if you're playing stocks, trying to buy and sell stocks, it's best to do it in an IRA. That way you don't have to worry about the tax thing. Because then you'd have to have the gain has to be much higher than just a gain. You need to be able to cover the taxes.
Tesla stock, for example. Like if you own Tesla stock and it did that monster move and you were in a regular brokerage account and say you wanted to sell it, well, you're going to have to pay capital gains on, it could be hundreds of thousands, millions of dollars. Where if it was in a retirement account, you could sell it and you wouldn't owe any tax. That's incredible.
Yeah,
I'm not trying to make
I'm
you feel Herbert,
interviewing.
man. I'm not trying to make you
Oh,
feel
I feel it's another sore spot
but it's
for me.
true. It's true.
But I'm interviewing Emmett Peppers shortly, and so at some point
He'll tell you about it. Yeah,
I will publish that video on my channel. And as some of you may know, Emmett made a huge bet in his Roth IRA, an options bet, and he's now doing very, very well. So it's like people tell me these stories, and it just it's like, oh well, I can't be jealous. I got to think about just
no, you don't be. You learn because now you're using it for your kids. Don't you see?
Well, late. My kids will do well, but too late for me.
Stoicism. It's never too late. Never have envy. Never have jealousy. Pass it on. Move forward. Go.
My excuse is I'm Canadian, so it took me a while to catch up. Only 25 years in the U.S. and I still don't know. So, but I'm Canadian, so that's why.
Don't worry, Herbert. A lot of Americans don't know about it either.
Oh, well, okay. Well, that's why you are an ex-financial advisor. We just lost. There he is. Okay. All right. Next question from Stephen Piccolo. Will Tesla have 50% gross margins Q4? So I think, Xander, you might have been in that call last night, that Twitter space. I was at a restaurant. I missed it all, but
it was riveting. It was.
I missed that.
Beautiful.
Who said this? Who said this? The 50? Well, I thought we were still shooting for 40. Where did we get 50 from?
Well, I don't know.
This
you
was
tell me.
The value analyst had a big announcement last night. He predicted 50% gross margins and 40% operating margins.
I can't.
I hope he's right. That's all I'll say.
Exactly. I hope he's right, but realistically, I would not make that bet. That is very, very up there. And I think it's higher than what Tesla's guiding for. And so if the argument is that they will surprise, aren't they ramping 2 factories? Well, I guess gross margin, if that's what we're saying, that's before operating expenses. So
yeah, but Xander, 50%.
Yeah,
and
I mean that's high. Yeah, but that, I guess the argument, what was the argument, that there will be FSD in there?
That was a little bit enhanced autopilot. Herbert, you could speak to it more.
No, I did not. Follow.
Then I'm the only one that knows about it. I can't believe you guys missed the big announcement.
I mean, dinner takes precedence.
It's on record. You could go listen to it anytime you want. It's like 10 minutes long.
Well, yeah. So, I mean, for me, I follow James Stevenson, and I think that James is much more realistic. I mean, I'd be happy if there was a surprise on the upside here. And I think that James might be under counting the FSD, because it's really something we don't know what's going to happen. It's a big bet to think that FSD is going to come out in November, December. It's going to be such a big public, kind of like it seeps into the public's mind that this thing's really solving, enough that people will all want to buy it, more than just the 15% take rate in the US, right? Whatever the take rate is, 10%, 15%. It's got to be. I do agree, though, at some point it's going to be 100% or 15%, or 30%. It's not going to be this kind of in middle thing. If it works, people are going to buy it. Everyone is.
Yeah. I agree.
Yeah,
the margin,
but it's is it going to happen this year, this quarter? No, I don't think it's going to. I just, who knows? I want it to. I badly want it to, but I have no reason to think that it will at this point.
I agree.
But if it's not just that, he also, I think, was talking about energy. The charger, the wall chargers are going to be able to be produced at 50% margin. I don't know.
Yeah, but that was later. He was saying specifically Q3 and Q4 this will happen, like right now.
Yeah. So
anyway, I'll get off this topic because it's silly.
Yeah. Oh, nice. I like the way you said that. So Ronak Patel asks the question, anyone believe that the stock gains significantly more in short term, it's smart to trim some gain, 20-25%, and get in again if it pulls back? Well, yeah. Ronak, this is the momentum investor, Christian. That's what he says. He thinks that it's smart to trim some gain. And you're saying 20, 25%. See, I'm learning. I can answer this question, Christian.
Well, go ahead.
But yeah, 20, 25%, right? So if it gains significantly and you don't say what the significant gain is, in the short term, is it smart to trim some gain, get in again if it pulls back?
So you want me to tell you my little story real fast?
Of course.
I mean, that's the question. So that's what I did. So I bought Tesla in 29.
Just to clear, he says in a short time. I don't believe he's going to talk. Your story is 6 months or a year long. It's a long journey of a year-long thing.
It was a year and a half when it did its 20x.
That's not what, I don't think that's what he's saying. He didn't say that.
Like a day?
Well, then he says if it pulls back again, 21-day moving average. But okay, let's assume that he's talking a year.
He's being very specific. Maybe Xander. I'll just say real quick. I'm not going to even go into my story. If you have a big gain and you're sitting on a 10x or a 20x, I don't see why you might not even take 50% out, sit on it, and then pull it back in. But that's just what I don't know exactly what he's specifically saying.
Not his question.
Go ahead, you answer it. I don't know.
Yeah, he's saying that if there's a big move up, right? Like right now you have Q3 or Q4, and it goes up. And then he wants to take 20 to 25% off the top and sit on that and then rebuy low. I think like Christian can speak to his momentum trading strategy, but he did the old markets crashing. There's an event that he could point to that spooks him, that he's willing to take some money off the table or all of the money off the table, like China shutting down, like a war announcement or whatever it is. That's the kind of easier to identify momentum play where you can try to predict what the rest of the market might do. But the problem that, this is something that I think about all the time. There's a portion of the portfolio, as I mentioned earlier, that I'm doing that exact thing. Big move, sell those leaps, sit back for a little while, wait till things calm down when things move back down. But that's a personal preference. Can it be done? Sure. But the challenge you're going to run into is that Tesla can continue to run. You saw that in 2020. It'll just run, and every day is going to go up. So we don't know what the overall market looks like. That's something really important to consider. Are we in a bear market, or have we bottomed and now it starts going back up and you see the rest of the market moving in that direction? But at least that's just my opinion. Obviously, I have no idea.
Good. That's good. I would just say real quick. So my thing is, right now, I see Tesla as a great value. I'm not playing the timing game anymore. We ran it up. Yes, the Fed was about to come in. We were at 12, whatever. We have all these headwinds, China shutdowns, Europe war, all this stuff. I chose that was a great time. Now I'm holding, and I'm not panicked. I am buying more, already have a big position, and I see great value. And the market timing for me is over. If you want to play these games, you can, but I think they're much harder to play now than they were 6 to 8 months ago.
Answer, Christian, because I know you've already said it. I'm just going to repeat what you said because I think it's really important. You are a momentum investor. You did
after a 20x,
you did sell high. You did wait till when you did trim your position, not all of it. You didn't sell all of it, but you sold, like he said, 20, 25%, some sort of gain. You waited, have cash in your hand. You then bought in when you thought that you didn't wait till it was maximum bottom. You were already saying it doesn't matter to you, but you felt enough that you were okay with it. You bought it. But now you're saying, and you've repeated this several shows now, that even if this goes back up to 12, oh my God, please, 1,200 divided by 3, 400.
Right.
Even if it goes back to 400 or to 500, you're not going to trim any position. The reason you're saying that is because you see that Tesla now with the 4 gigafactories, it's about to do an exponential leap. And so you're not playing that anymore. Correct.
So I always saw it. Let me just caveat. I always saw it. I just played a market game thinking the market was going to do something, and I just happened to be right. It didn't mean I was right. So now what I'm saying is I'm not playing market games. I'm accumulating shares. to run Tesla for Tesla 2.0, as I like to call it.
All right, we got another question here from MyTube72. Will Cybertruck have dual charging to be able to power another EV and power your home in emergency situation?
I mean, it'll be able to power 240 volt, tools and stuff. So I imagine the output portion is already available. Will they allow you to do the house? That would be my guess. I think they would, because remember, they're also going to allow you to charge the quad, the cyber quad on there. So yeah, I think that you'll be able to do so. The thing with the powering your home in emergency situations thing that people underestimate, or at least don't realize, is that you actually need to wire your house up to be able to do so. So it's not just like, hey, I can plug it into the outlet. You need to pull the house off the grid, be able to isolate it, and then feed only circuits that you would want in an emergency.
Okay, Ash Martian, I see you're listening. Can you please send me a text and give me the right answer to this? I'm calling an audible thing, but my
lifeline.
A lifeline.
I'm calling a lifeline. Don't know anything about batteries. Don't know much about Cybertrucks. I do know that Elon has continued to always tease us that the Cybertruck is going to be the best product that they've ever made. The ability to power another EV. We know that Ford F-150 is making a big, they're hoo-hawing about being able to do that. So yeah, I think that this is going to happen. That would be my guess. All right, next question is, what do you guys think about Rivian stock? Is it a good buy or not?
I'll take this one.
Yeah.
So Rivian, Lucid, all these things, I never got it. Like, Tesla's already climbed the mountain. Why do you want to invest in something that Tesla's already done? Like, to me, as an investment, if you want to play the EV game or just the game, why would you not just buy Tesla? Tesla. And a great line is, Tesla's the next Tesla, from Warren. He's absolutely right. Why would you try to buy an unprofitable company that we can see how they're struggling scaling? I mean, Lucids are having a terrible time of it. Rivian's still in its growing pains, and they're burning so much cash. Tesla's already through it. Then here's the kicker. Not only is Tesla through it, and they're great value, Rivian and Lucid, they don't have an energy business. They don't have an FSD they've been working on for 5 years, and we're getting close to being able to drive people around. They don't have the possibility of a bot. They don't have the great Elon Musk at the helm. Like, this is a no-brainer. I don't know why anyone in their mind would be buying Rivian stock and Lucid stock and not Tesla stock. I'm off my rant. Go ahead.
So
please share your opinion. Oh my God.
So, if Tesla was just like an auto manufacturer and wasn't putting up the numbers, right, the earnings per share and pulling in cash, I would not be a Tesla investor, but or see the potential in the future. So what's the bet? What is the bet? You want another automotive company? Yes, they have some plans for a charging network. I was actually in a Rivian this weekend, where we were looking at a house. He had a Rivian, so I got to see it. Good, very cool. I liked it. I want them to succeed, but in terms of an investment, I do not want to invest in for me personally, and I didn't play the Lucid game or the Rivian or Nikola or any of those. I just do not trust any of those jockeys. And yes, they have an Amazon contract, but again, things change. You have to become profitable, and to me, it's just too much risk to take on. So, in my opinion, not a good buy. But
yeah,
just my opinion.
Well, I did not buy Lucid or Rivian either, but you do watch other very smart people. I think Ross Gerber, they started taking a position on these things, and it is a head scratcher. I'd rather put all my money, but I think that when you're an ETF fund, you can't you can't put all your money in. You have to have a percentage that you're going to say that's going to be all in on Tesla, but then the others, right? And that's what's happening with Cathie Wood. They have a rule of 10% max. But so then if you still very much believe in the EV, business opportunity, which I think is very clear, and that is low risk, that any EV is going to sell. Not any EV, but you got to survive. You need to have a compelling product. And so Rivian, they're losing a lot of money per year, but they've got something that's looking like it could have a market. And so and then the question is somebody going to be saving them, right? Is some other car manufacturer is going to be able to buy them so to reduce that cost?
But isn't that baked in, right? So that's the problem, is if you look at the multiple on these things, this potential that they actually succeed, they're trading for a high multiple, and we could take a look at these things. Go ahead, Christian.
No, I was going to say, and there was a great graph. I forgot who tweeted it out. The money. So Tesla producing hundreds of thousands of cars, the cost it cost them, it was like close to the same as Rivian for putting out the little amount of cars they had. So what I'm saying is, I'm not against it. I hope they do well and they have a good product. But for me, Tesla is just so obvious that if you want to play this space, I don't know. It's so hard for me to go heavy on a Rivian or a Lucid, where I think they might not be in business in a year or two. Where Tesla, we know they're going to dominate the next decade, and I'm comfortable going super heavy because I know even in the worst of times, they are a profit machine and they're going to be around for a long time. Just makes me comfortable to put my hard-earned money. I just don't want to risk it and put heavy on a Rivian, a Lucid, a Neo. That's any of that stuff. I just don't want to play. That's just my opinion.
All right, we've got another question here from Fit Connect. Besides Tesla, what other stock closest supports the Tesla mission or complements it? Progress the most as a second good investment?
Lemonade. I'm sorry.
Oh no, Fit Connect, you got him talking about lemonade. How's that have anything to do with the mission? Please tell me how an insurance company is a friggin' mission. Yeah, buddy.
Oh well, guess what? What company's doing the Tesla mission? Tesla's the only one doing the Tesla mission.
Lemonade bought Metromile. Metromile's safety of cars as well. I use Metromile as my insurance company, but yeah, they're insurance company. You're there for the money.
They're a charitable, meaning they donate a portion to charity, so they're trying to do good work.
You believe that? You believe
that? They do that.
Sure.
Don't say for sure. They are. You have to look it up.
Yeah, 1%, 0.2%. Sure, okay.
No, go look it up. Anyway, I don't know. Dan, do you have an opinion? Who's your second company doing the mission?
TSLA. That's the only language. I'm 100% all in, so I'm like the worst person to ask. But I think if you're trying to diversify, it's really hard to be a stock picker. So if I were to lose any kind of confidence in Tesla, I would actually just park some money in an index fund.
I think if you can invest in other Elon companies, they are all Tesla mission, right? So Boring Company will change the cities in the world. Starlink and Starship.
And I was half joking there. Yeah. I was half joking with Lemonade. So I'm looking closer. I guess it would be some type of company. Who's that? A solar company or something doing good work. Something in the helping the environment. That would be a company like that, a solar company or a battery company. But yeah, Tesla is the cleanest, clearest pick. Yeah.
Okay. Next question.
Yeah, I would say chips over just solar. I think.
There you go.
Chip manufacturer or AMD or whatever.
So Declan Murphy asks, do you think Tesla would ever do an Apple-type launch of a new product? Launch a new Model 3, but keep the older Model 3, but at a cheaper price than previously. That is what they're doing. So every time there's a Model 3, they continue, without even doing a launch, they are upgrading it and changing it and making it better. So imagine if you had an iPhone X, instead of calling it an iPhone 11 and then an iPhone 12 and iPhone 13. They just called it an iPhone X, but each year they have the iPhone 11 features and iPhone 13 features, and the shape might change a little bit, but that's what they're doing. Do you think that they're going to start copying that and do a Model 3? I don't think so. This is model works for them. They might do a different form factor like Model Y from based on a Model 3 base, but yeah.
Yeah.
Well, what's the obvious answer? Go ahead, Daniel. Go ahead.
Just simply no. I don't think Tesla will ever release the same product that and call it an older, like relaunch it and charge less for it. I mean, they're just going to drop the price on the Model 3. That's the beauty of the way that they've designed this, is that the same exact car it can go up or down in price, right? And they don't need to release it once a year like the traditional manufacturers. So I think when it's time to release the cheaper version of what you're alluding to is like the $30,000 or $35,000 car, which used to be the 25, that's going to happen with a different model number, in my opinion.
But what he's referring to is like sometimes you have the iPhone, what is it now, 13, right? And then then when the next version comes out, they'll keep the iPhone 13, but then lower that price, right? So then if Tesla does not do that, they have the Model 3, and each year they keep improving it. How do you then? It's a new market. People want to buy that brand, but at a lower price. And right now, you're correct, Declan. I think that this is one area Tesla is not doing well in, and Elon admitted it, that the price has gone too high. That we're not, Tesla's not able to accommodate the people that want to buy it badly but can't pay that amount of price, and so then now they're waiting for a Model 2 or a compact car, but that's going to be years down the line instead of
right.
offering.
But
something.
that's growing, right? But isn't that the growing pain? They can't make the cars, so they're still selling the 3s and the Ys, and they're going to sell the Cybertrucks, and then the Roadster is going to come, and then the Semi is going to come. Why would you move down market to try to scale even more when you can't fulfill the current demand?
Yeah, you're right, Dan. But it's a good question.
Yeah. Okay, let's just show one more thing here. It says in say a year or two, if they have inventory, no demand because a nuke goes off or something, it will go into their fleet and then they'll sell it later. Well, yeah, okay. There's a lot of what ifs there. Yeah.
Anything with nuke in the question, it's hard for me.
Or he's saying that there's so much. In this case, that they have inventory, and then there's no demand. Well, okay. Yeah.
No, there will be. They'll make the demand. They'll just drop the price, and hopefully they could at least make a percent off of something. But yeah.
Okay. Awesome. Well, guys, thank you very much. So next week we're going to actually switch the time to Wednesdays at 12 noon. I think we're still debating if we're going to do that or not, Pacific time. In the meantime, let's do this quick, what do you call it here? I'm going to share my screen here, and we're going to do a quick lottery. Boy, it's the first time I've done this. Okay, we're going to draw from all the people that... Oh, am I sharing the screen? You can see this? Yeah?
Yeah.
Yeah, we got you.
Who's going to win? There we go. Pete Kosadnar. So we'll send me a direct message on Twitter, and I'll send you a PDF of all the major lists, including the one that is the one that has the list on it. So good. Okay. Wonderful. Thank you, everybody. Really appreciate this, and tune in again next week. Thanks, everyone.
All right. Bye, guys.
Bye.
Thanks.